It's midweek. Hello and welcome to Business Live. Coming up, Institute of Economic Affairs accuses Bank of Ghana of using monetary policy tools to finance 2024 budget as local banks struggle to grow. We shall be analyzing these assertions with an economist. Also in this bulletin, some oil marketing companies increased fuel prices at the pumps despite suspension of the price stabilization and recovery levy by government, while others have started enforcing the new guidelines. Plus, later on the Joy Business Van, we will bring you the concluding part of how agri machinery startup Age Engineering is seeking investors to expand operations. We have details of these and many others for you. Please stay. Grateful to have you on. I am Pius Kojo Baka. We can now take a look at our stories. And the Executive Director of the Institute of Economic Affairs, Dr. John Kwache, is accusing the Bank of Ghana for using monetary policy tools to finance the 2024 budget at the detriment of domestic banks. According to him, the high interest rates and high cash reserves ratio create unfavorable conditions for the banks, as well as that affects the operations and access to cash to lend to individuals and businesses. There is more in this report.
The pace of disinflation had slowed in the first 2 months of 2024. The Bank of Ghana's latest inflation forecast suggested a slight elevated profile. Meanwhile, the Bank of Ghana saw overall risk to inflation to be slightly on the upside. It was based on the foregoing considerations that the MPC decided to maintain the policy rate at 29%. Now, to us, however, this decision is problematic. The decision to maintain the tight monetary policy stance when the drivers of inflation are not directly amenable to the policy rate is puzzling. We have long pointed to the futility of using the policy rate, a demand instrument, exclusively to fight inflation, which has strong supply and cost undercurrents. What is needed are complementary measures to address the inflation drivers, that's food prices, fuel prices, utility prices, transport fares, and the exchange rate directly. As we have repeatedly argued, interest rates in the country are prohibitively high and represent a drag on investment and growth. And this is because they are being artificially held up by a misplaced and misdirected monetary policy, which has to change. The Monetary Policy Committee also announced other complementary policy measures, specifically relating to reserve requirements. Again, as we have argued before, the cash reserve ratio, which now ranges from 15 to 25%, is unnecessarily high. In most jurisdictions, reserve requirements have been completely abolished. They impose a high cost burden on banks, which is then passed on in high lending rates, which are suffocating the economy.
All right, so let's go on Zoom and speak to economist Dr. Patrick Esumin on some of the economic issues raised by IEA. Thanks so much, sir, for your time here on Business Live. Now, do you agree with the IEA that high interest rates and the increased cash reserve ratio have created unfavorable conditions for banks, hampering their operations and, of course, its access to liquidity for lending to individuals and banks?
Good evening, and good evening to viewers. Thanks for having me. I think that we have to understand that we are in a general tightening environment, and the policy rate and the cash reserve ratios are all part of a broader attempt by the monetary authority to keep a tight monetary policy stance. So while it might not be an ideal condition for banks to operate and do well, I think if we have to accept that the inflation regime we are in is extremely high, and that we need to take measures to fight it, then you have to understand where this is coming from. So I'm not sure that, obviously when we do tight monetary policy, that's what we want to do. We want to restrict the ability of commercial banks to lend, and then try and then squeeze the liquidity a little bit. So that's what it is.
Again, do you think that the central bank really is necessarily embarking on such monetary policy measures to fund the 2024 budget?
I have no idea how to answer that or where that will come from. As far as I know, the central bank should be doing its work primarily and solely to stabilize prices and also promote economic activity. I have no reason or have no basis or have no information to say that the monetary authority is using this to finance or having political motives for doing this. If somebody has that information, I have no idea. If somebody is saying that, I have no idea where that's coming from.
That's fair. But what really would be your response to the assertion by IEA that the central bank is engaging in a quote-unquote lazy work by relying on periodic inflows from the World Bank and COCO syndicated loan as well as the IMF to stabilize the cedi?
Okay. So now, if you get into that particular criticism, I think, so thankfully it's not just a criticism. It's a criticism that comes with a suggestion. My sense is that the IEA is giving the right advice to the wrong quarters. You have to understand that the suggestions that the IEA make on how to make sure that the cedi is stable on the long-term basis, making sure that we owe a greater share of our natural resources, reducing our dependence on imports, and expanding our industrial base to do more value addition. Those are valid. But I think that you shouldn't expect that is part of the responsibility of the central bank. The central bank's role is management of the currency. So while I think that it is accurate to say we can't only depend on the demand management side, the demand for forest management side, which is what the Bank of Ghana does, I think that it is fair that those things are taken up by the fiscal side. At different points in their statement, they also rightly point out that it appears that the monetary is doing too much. Some of the things that the fiscal should be doing. I think this kind of criticism falls in that line. If you say that the monetary authority is doing too much, it's time for the fiscal to take up some of the slack. This is something that should be directed to the central government by way of coming up with long-term sustainable policy to change our dependence on these foreign inflows for stabilizing the currency. So I think that while I agree with the suggestion that we should diversify our long-term forex earnings, I think that asking that the central bank should be the ones to doing this is a little bit, sending that advice to the wrong quarter.
All right. Again, they criticized the Monetary Policy Committee for basically the way it has been fighting inflation with the policy rate. According to them, what is needed are complementary measures to address the inflation drivers, which are, of course, food prices, etc. Really, do you think this is an advice the committee must consider seriously? So, if you go back in 2022, I think it would have been July or June, where the BOG governor gave an interview to Bloomberg, I believe, and then made a statement to the effect that the inflation that we were seeing was surprising to the committee itself, and that they thought that the supply side factors are the ones driving the inflation. At that point, it was very puzzling, and I think this is the context in which the IEA makes that criticism. If you think that the inflation rate we are seeing is primarily driven by supply side factors, it doesn't make too much sense to be raising the policy rate so much. However, fast forward 2023, then we learned that actually in the year 2022, the central bank had monetized the government, had given a lot of money to the government to spend. And that will explain why, if there's a lot of liquidity that has been given to the government, it makes sense why we saw the kind of policy rate hikes that we saw at that time. Now, where we are today, my sense is that a lot of those
extra liquidity that came into the system because the Bank of Ghana was financing the government. My sense is that a lot of it has been mopped out. So that's why maybe in the last few readings, we haven't seen the policy rate go up. So I'll go up. In fact, it's come down somewhat. But you have to understand that, the central bank is not supposed to be trigger happy and start cutting rates the moment it feels that, the inflation has come under control. Because there can be policy mistakes. You cannot really immediately reverse them. I think that a gradual and cautious approach is what is warranted. So while we all want the policy rate to come down very quickly, I think the central bank, in my view, is being right in being cautious, because don't forget that we've seen that the inflation threatening to pick up again. Where I side with the criticism is that if you make a diagnosis that the inflation is primarily supply side driven, then you shouldn't be raising the policy rate. But then again, they haven't done that in a while. So I'm not sure that it's a fair criticism overall.
I see. Quickly, to this very subject you're about talking, we know the IMF mission team is in the country to review our program. Really, do you believe that we'll pass the test?
I expect that we will. I think the recent development in the currency market might give concerns about whether we will be able to meet the target related to the reserves, the gross international reserves and the net international reserves. But, I think the BOG has had a history of, timing their releases and then their forest operations to ensure that when we have an important visit like this, we have enough reserves. So my suspicion and my expectation is that we should be able to go through the review successfully. Whether that would be enough for us to go to the board for approval for the next round, I think that one might take some time. We've seen that in this program, the fund has tied a lot of board approvals to making progress on the debt restructuring. You suspect that there's something else coming up in relation to that. So, but in terms of getting a staff-level agreement on the progress made, I expect that should be smooth.
Thank you so much, Dr. Patrick Esuming. We are indeed grateful for your time speaking to us on Business Live. Let's stay a while longer with issues that has to do with the Bank of Ghana, because they have again started increasing the amount of dollars it is supplying onto the market to help stabilize the cedi. More in this report.
From around $5 million to the commercial banks and business to meet their foreign exchange demand, the Bank of Ghana is now doing more than $10 million. Joy Business is learning that, for instance, about $15 million was released onto the market for last week. This represents some significant increase from the levels that the central bank was supplying to the market early last month. The foreign exchange that the regulator has been supplying onto the market is different from that dollar auction program the central bank is currently implementing. It is, for instance, planning to sell about $120 million to the importers of petroleum products for this quarter. The Bank of Ghana has also increased the cash reserve requirement for the commercial banks. The governor of the Bank of Ghana, Dr. Ernest Addison, for instance, has maintained this fresh measure should go a long way to help slow the rate of depreciation of the Ghana cedi against the US dollar.
Senior finance lecturer at the University of Cape Coast, Dr. Seriam Kawo, is entreating government to be more transparent and accountable in order to attain the confidence of Ghanaians in its quest to mobilize revenue domestically. Now, as the visiting IMF team reviews Ghana's tax measures, Dr. Kawo is optimistic that when government is prudent and accountable with its expenditure, Ghanaians will welcome its tax measures.
Government wants to raise enough money, and you want to convince us that you are going to use the money for the intended purpose. Transparency, accountability, probity. What we need. We need to see that our monies are being used for the right things. We need to see that you are not spending unnecessarily and we are not getting value for money for projects that you are undertaking. We don't have to wake up one day for government to tell us that this is the tax we want you to pay, so go and pay it. There is the need for town hall meetings, engagement with the population, social media engagement, radio, TV engagement. Let us all buy into it. and you tell us how you are going to use that particular amount of money that you are raising in terms of the new taxes, so that when at the end we can measure you with that particular one.
Okay.
Emission tax is being implemented. How are you going to use it? How much has been raised so far? You don't tell us that the tax has gone into the consolidated fund, and for that matter, we don't need to know. In that way, there will always be resistance. When there was resistance in terms of the e-levy, we have found government officials having town hall meetings. The town hall meeting should have preceded the promulgation of the e-levy act.
All right.
And then the implementation of that particular one. So we want government to go down to the people. But when you stay up there and you want to implement policies, and these policies, the people do not understand the policy tends to be ineffective.
Some oil marketing companies have adjusted prices at the pumps from this morning. This is in line with the 2 weeks review in prices. Checks on the market also showed that some of the companies have started implementing the new price guidelines. Here is more.
Market leader Goil, which was selling a litre of petrol on March 1 this year at 13 cedis 49 pesos, this morning is selling a litre of petrol for 13 cedis 99 pesos. On the other hand, diesel is now selling at 14 cedis 60 pesos, up from the 14 cedis 49 pesos a litre on March 1, 2024. Another player, Shell, is selling a litre of petrol at 13 cedis 60 pesos, while diesel is going for 14 cedis 60 pesos. Total Energies, which has gone up by a similar margin, actually adjusted price at the pumps on Monday, April 1, 2024. Some of the players are linking the increase to challenges with the Ghana cedi and rising price of crude oil on the international market. Joy Business even understands that more oil marketing firms will be increasing prices from tomorrow morning. It appears the decision by government to suspend charging the stabilization levy on fuel did not do much to halt this increase. But some industry players insist we could have witnessed a higher increase in price at the pumps if government had not suspended the levy. Well, it appears some of the oil marketing companies have also started implementing the new guidelines for pricing of the petroleum product. For instance, under the new regulations, oil marketing companies are now allowed to differentiate when it comes to pricing depending on their location. Well, it looks like Star Oil is taking the lead on this. This morning, Star announced that petrol is going for 12 cedis 97 pesos per litre, while diesel is selling at 13 cedis 97 pesos. It however announced that some selected service stations across the country will sell diesel and petrol lower than what it has announced.
You're still watching Business Live. We'll be right back with the Joy Business Van. Hello, welcome back to Business Live. Under a year, Theophilus Asifua-Boaje, who just graduated from the university, has been able to manufacture over 30 sets of agricultural machinery which are being used across the country. The entrepreneur, who aims to industrialize Africa, is seeking investors for his startup, Age Engineering. Here is the concluding part of our feature on the Joy Business Van, where Theophilus speaks about the future of the business.
The Joy Business Van is brought to you by EcoBank, a better way, a better Africa. MTN, what are we doing today? Theophilus Asifua-Boaje is navigating a path to success in engineering.
This place is the extension of my home, and it has been turned into a production facility. So as you can see, we refer to ourselves as Africa's #1 treasure machinery manufacturers. So what you are seeing here is production that is currently ongoing.
Yes, from his home, he's producing equipment that are helping tackle post-harvest losses in Ghana's agric sector.
So what you are seeing here is a maize thresher machinery. And what this machine does is, after you have dehusked the maize, you put the maize inside, it threshes, the cob comes out, and then you get your grain. So what you are seeing right now is finishing that is ongoing. And then when you come to this place, this young gentleman here is working on the sieving system. So the sieving system, there is a sieve that is inside the machinery that helps in sieving the grain from the cob so that you can get a perfect thresh. So that is what we are seeing him do over here.
The university graduate acquired these skills on the side when he wanted to help fix his mother's broken down milling machines. Over time, his interest went beyond fixing the machines to making them.
The first equipment I sold was the cassava grinding machine. So I've actually sold quite a lot of them. I've sent some to Eastern region. Most of them have gone to Volta region. And then I've sent some to Northeast region as well.
Theophilus' initial challenge was to get funding to produce the machines. He had to use savings from the National Service Program.
You have a lot of people who do not believe in whatever you are doing. So why do we commit our resources to something that we have not seen you done before by using mere talk? So that was the inspiration. I said, okay, why don't I build one for people to see that what actually I said I am able to build, I am able to build. So there was a challenge, and I gathered few money to build the first prototype, and that first prototype I sold it. The money that I got, that was what, with the engine, that was what I used to build other machineries. So when I sold them, then I started building the threshing machineries. So when you come here, threshing machineries, the production of threshing machineries is higher than any other machine that we build here.
In just a year, Theophilus and his team have been able to build fufu milling machines, spice milling machines, cassava press machines, maize threshers, and multiple crop threshers.
For now, the business is still at the infancy stage. So we do not have a large customer base. So what usually happens is that the people that we have sent the machineries to, they do referrals. And these referrals sometimes, they come in, oh, I saw your machine at this place and I think I love it. I also have a large acre of farm, and then I want you to build one for me. Then we take the money and then we build it.
Age Engineering is seeking investors to scale up its operations.
With production, the fluctuation in the prices of production materials is crazy. Today you are buying a 2mm steel plate for 460. The next day you are buying it for 540. Some other time you go and they are telling you it's 600. So for an infant business like this, it really kills our dream. Sometimes I want to give up because the price hikes are too much. So sometimes I want to give up, but I cannot give up. I have started, so I need to complete it. The edges are very smooth. The things that we have applied at the edges, we have to sandpaper it so well so that it will be smooth. So after applying the this on it, after its application, we wouldn't see any. It has to be top notch so that it can favorably compete with any other machinery that is on the market.
By deciding to start this business, Theophilus is glad he's able to create jobs for young people. He plans to build a training academy to promote TVET education. Theophilus also has plans to expand.
We want to extend or expand our operations to other regions of Ghana. So let's say in the northern part of Ghana where a lot of cereal goes on, in the eastern region, for at least in 5 years we are able to get 2 or 3 other branches in other regions. I think it's a laudable objective.
For now, Theophilus is grateful for little successes. His ability to make these machines is a dream come true.
Thanks so much for watching Business Life with me, Pius Kojobaka. For more stories, do log on to myjoyonline.com/business. Bank of Ghana financing 2024 budget using monetary policy to hurt domestic banks. That's according to the IEA. Also on that portal, decision to halt electricity export to neighboring countries apt. That's according to the Independent Power Ghana generators to President Akufo-Addo. Great stories. Do visit the portal and get yourselves updated. See you same time tomorrow. Bye.